Hi, I'm Wong, Director of Phillip Capital Management Hong Kong. The widely expected inclusion of China A shares to the MSCI indexes did not materialize, but it does not have a big impact on the China A share market. The Shanghai Composite Index hit the recent new high of 5,178 points this Friday. MSCI stated that the decision to include China A shares remain on its 2016 review list, and China needs to step up its efforts to liberalize the A-share market. It expects to include China A-share in its global benchmarks after a few important remaining issues related to market accessibility have been resolved. Those few important remaining issues are further liberalization on quota allocation process, capital mobility restrictions, and clarification on beneficial ownership of investments. As China A-share inclusion remains on the table, the MSCI statement is seen in a positive light. On the other hand, the People's Bank of China revised downward the forecast for the country's economic growth and consumer inflation for 2015. They now forecast China's economy will expand 7%, slightly lower than a projection of 7.1% made 6 months ago, but still in line with official growth target. The forecast for consumer inflation was revised to 1.4% from 2.2%. However, the People's Bank of China expects that economic growth will likely pick up in the second half of the year as the government steps up effort to spur growth. So we are still optimistic about the medium-term outlook of the market and expect the Shanghai Composite Index to consolidate around the 5,100 level in the near term. I received 2 email inquiries from 2 investors in Singapore. David wants to know how I think about the X shares. In my view, the X shares are still very cheap compared to the A share. The Hang Seng China Enterprise Index is trading at around 10 times historical PE. I think one of the reasons why the Hong Kong stock market lags behind the China market is due to the political uncertainty on the outcome of Hong Kong lawmakers voting on the reform package for the 2017 chief executive election scheduled for June 17th. I think once the political uncertainty is clear, the Hong Kong stock market will catch up with A shares. Julian asked if the US Federal Reserve starts to raise interest rates, will A and X shares stand on its own? I think US rate hike would not have a big impact on the China market, as China has started its own version of quantitative easing not long ago. We expect at least 1 more rate cut and 2 more reserve requirement ratio reductions this year, and this will to a certain extent mitigate the negative effect of upcoming US rate hike. If you have any question about A shares or the China stock market, please feel free to write an email to me. My email address is cs@phillip.com.hk.